To get us started, Megan, I was wondering if you might be willing to just give us kind of like a high-level perspective overview, kind of like a situation analysis of from Peter's desk today of where things sit in Washington, what's important to him, and then we'll take it from there and get into some credit union issues.
Perfect. Yes, it's one of those days in Congress where everything that he's touching is of utmost importance. So he had a couple of intel briefings already this morning. He's got one this afternoon on the Ukrainian situation. And, he's staying close with leadership on that. His perspective has definitely been interesting to hear about because he's getting obviously some inside information that most of us don't have access to. But the thing that's top of mind for him, and I'm sure it's top of mind for your customers as well, is what are the impacts going to be on our pocketbook when we talk about limiting Russian oil? How do we set ourselves up in the future for moving past having to do business with dictators such as what we're seeing in Russia and other countries that are huge oil producers? And it's definitely something he's thinking about. We also, thanks to Chairman Leahy's good work, we're really, really close to getting a omnibus out of the appropriations committees and on the floor of the House either late tonight or early tomorrow. We are really hopeful to have some good provisions that will help Vermonters, including the so-called, formerly called earmarks, but community funding projects. So we had 10 projects that the congressman put forward to support local projects within communities, including a general store, windows for the Sheldon Museum, very small projects, but that would make a big difference in our communities. So we're really excited about getting that across the finish line. And I'm trying to think of what else is on. And then he had a hearing this morning on electric vehicles and making sure that EVs are affordable and accessible, and we have the infrastructure needed to do that. And a big part of that was the infrastructure bill that passed last fall, and making sure that EVs are not just something that people have access to in cities, but people all across the country and in our rural communities can have access to charging and access to affordable vehicles. So that's just a little bit of what we've been dealing with, but it's definitely an exciting time to be in DC. Though I think everybody on this call would love it if we lived in a little bit more boring times, because these history-making times are getting pretty exhausting. But free, I'm happy to take questions or any comments that you have now.
Well, these history-making times have been going on for quite a while now, it seems like. So never a dull moment inside the Beltway, it seems like. No. Hey, thank you for that update, Megan. Thank you very much. And again, if anyone's got any comments or questions or anything you want to share, feel free to chime in at any point. I do have a couple credit union specific things that I'll share with you, and hopefully others will chime in and elaborate on some of those things. And some of you on the line with us from credit union may not be familiar with some of this data. We're putting together some kind of document to share some of this Vermont specific information, but and I think we provided this information to your office, Megan, last week, the week before, but just in Vermont, credit unions as cooperatives, provided to their members in 2021 about $43 million worth of savings in various rates and fees compared to other types of financial institutions. So that's money that stayed in the pockets of the roughly about 400,000 people that are members of Vermont credit unions. Those credit unions issued somewhere north of 13,000 mortgages last year, $662 million in auto loans, $109 million in commercial loans, support through those efforts and their own employment about 4,300 jobs in the state of Vermont, and have a total economic impact somewhere north of $720 million a year in Vermont. So we're real proud of where Vermont credit unions have come, particularly in recent years. And it seems like there's been, since the 2008, 2009 timeframe in the mortgage meltdown, there's been a big gravitation towards credit unions by consumers in general, heightened awareness, and a lot more people wanted to join the ranks of credit union members. So we're real fortunate for that, and fortunate that we have so many great credit unions in Vermont that are doing all of this great service for Vermonters and for the Vermont economy. There are, and I think we might have shared this with you too, there are there are a number of different issues I was going to reference this afternoon for you legislatively. Three of them are, I'll call them like housekeeping kind of items, or in my book anyway, and that they are modifications to the Federal Credit Union Act. I think they all have House versions. One of them that I think I mentioned to you already, just got introduced last week, is the Federal Credit Union Act, or Credit Union Board Modernization Act, which is HR 6889. And it very simply changes the requirement for federally chartered credit unions to have a meeting of its board once a month to having it no less than 6 times a year. And not, a huge change. And I don't think anybody would have any angst on that. But it is something embedded in the Federal Credit Union Act, so it does take an act of Congress to change. Again, that just got introduced last week. It's bipartisan. There's, I want to say, about 12, maybe more co-sponsors right now, and of equal number of Democrats and Republicans. So hopefully we'll see that make some traction. The second housekeeping related one is, again, specific to federal credit unions, because it's a Federal Credit Union Act modification, increasing loan maturity limits for federally chartered credit unions from 15 to a maximum of 20 years. Currently, federally chartered credit unions are limited to, when it comes to non-mortgage loans, a maturity of no more than 15 years. And the proposal in HR 5189 is to have that go to no more than 20 years. There's no limit of that type in state laws, in all but one state, I think it is. And so it's really boils down to kind of a parity issue between federal and state chartered credit unions. And of course, banks don't have that any kind of limitation at all. So we're anxious to see that get passed as well. The third one that I'll mention, again, something that rarely happens, but is cumbersome when it does happen, is the branch safety legislation. It's in the House, it's HR 2311. And that just gives a credit union the ability to expel, I'll call it, dangerous members, and maybe some of it has been exacerbated during a couple of years of pandemic. But when you have, the rare, extremely rare instance where you have an unruly person in the lobby of a credit union that just can't be dealt with, or someone who's caused a financial loss to a credit union, currently federal credit union law requires that the expulsion of a person from membership, which happens almost never, but it does happen, requires a vote of the membership of that credit union, which, as credit unions get larger, as they have in recent years, is really unruly to try to deal with that for dealing with just a single member situation. So what this proposal does is move that to a vote of the board of directors. Other than that, Megan, and we'll send you more detailed information on those 3 pieces of legislation if you don't have it. We just wanted to alert you to some of the things that credit unions in Vermont are doing. And so I'm wondering if any of you are willing to share. I know John, Bob, and Ron, John, Bob, and Rob, you and I spoke a short while ago about some of the things that you're doing in your credit unions. And I was wondering if you wouldn't mind, any one of you, starting us out by sharing with us.
Sure. First, Megan, thank you for joining us. My name is Bob Morgan. I'm Chief Executive Officer at North Country Federal Credit Union. We have about 63,000 members, and our field of membership includes the northern 10 counties of the state of Vermont. I think kind of the theme I want to leave you with today is just how quickly and well Vermont credit unions are able to pivot and be agile and adapt to circumstances that require us to do so on behalf of the members. And really over the past 15 years, whether it's been the financial crisis or government shutdowns, COVID, all those different things, we have adjusted very, very quickly to together to make sure that members are well taken care of and served. And I think it shows up in the macro way I just mentioned, and then to the very specific way, we have a real reputation within Vermont, within your constituencies, being the trusted source when members have a financial problem or are looking for a way to improve their financial outlook. They come and talk to us and talk about what their issues are, and we oftentimes can come up with creative and flexible solutions. And I think that's why it's so important that from the housekeeping things that Joe had mentioned to even things that aren't on the table right now, but maybe someday will be again, such as artificial caps on our member business lending or other things that just sort of artificially constrain our ability to be the most flexible that we are things that we'd urge you and the congressman to certainly be aware of and take into consideration as you consider kind of these issues, because ultimately our goal is to benefit financially Vermonters, and I know the congressman shares that as well.
Great. Thank you so much, Bob.
Thanks, Bob.
Yeah, I can build off of that a little bit. Thanks for the great starting point, Bob. You know, just to build off that a little bit, Megan. You know, one of the things that I think most of us do as credit unions is also, you know, we kind of integrate our focus areas and our strategies on things that are of strategic importance to the state of Vermont. So I'll use VSECU, and I should have introduced myself. I'm the president of VSECU. So I'll use us as an example and talk a little bit about our green energy lending program. Vermont obviously has renewable energy goals. We've aligned our lending practices to help facilitate and get us closer to those goals. We piloted a new mortgage product, for example, last year that allows people to roll in some energy improvement work to their homes and to their mortgage. And get the benefit of some of the appraisals as a result. And you know, the other piece that I would mention, and it may follow on with a question, which is VSCCU has also been one of the only financial institutions to actually serve the cannabis industry in Vermont. And we've done it not necessarily because we have a view on cannabis per se, but because we believe that everyone should have access to financial resources to the banking system. And along those lines, I know that the Safe Banking Act made it through the House, but it seems to be stalled in the Senate. I'm wondering if you can share any optimism, that would be terrific. I'm suspecting that you may not be able to, but if you have any news on that, that would be helpful as well.
I don't have any optimism, or I shouldn't say I don't have any good news to share yet. As a person who's been working in Congress for a long time, I am pretty amazed at the rapid change in cannabis policy in general. So where I am positive is that because it does have bipartisan support, there's still potential, as opposed to, you know, even 5 years ago, I would have just laughed, you know, that kind of question even out of the ballpark. I didn't think there'd be any chance. So I'm somewhat positive, but no news to report yet.
Thank you. And if there's anything we can do to help, please let me know.
So just to play along those lines for everyone, the Safe Banking Act doesn't obviously legalize cannabis in the country, but it does provide a safe harbor for your institutions, both state and federally chartered, and in states where it is legal, to be able to provide financial services to businesses and individuals related to cannabis in some way, shape, or form. without the risk of, in the back of your mind, that some federal agency is going to come knocking on your door to reprimand you by whatever means for aiding the exchange and sale of illegal substances and whatnot. That safe harbor provision, the Safe Banking Act, has been passed in the House 6 times now, and over the past, I forget what number of years it is, and made its way over to the Senate again. And there were attempts last fall, I believe, Megan, to piggyback it onto different pieces of legislation and whatnot. And that's where it sits now. It's although not every credit union, much less every bank, wants to or seeks to serve the cannabis industry. It concerns me that later this year, in the fall sometime, Rob, you have more insights on this than I do, in the fall sometime this year, that Vermont is reportedly on track to have its first recreational outlets open up, who are all seeking financial services from some financial institution or multiples of them, via CCU, although it is, I believe, still the only one that has chosen to serve cannabis-related dispensaries in the state of Vermont up until now. In the Vermont legislature, when I'm talking to those 180 people, and they're talking about cannabis services and this recreational door opening in the fall of this year, there's this assumption by legislators that, well, all credit unions are going to want to serve the cannabis industry. And because when they hear about financial services and cannabis nationwide, not always, but the bulk of the time, credit unions come up in the conversation, because that's the predominance of institutions that are serving the cannabis sector across the country. And that pioneered it. If you look at, Colorado and the Northwest and whatnot. So there's this expectation that credit unions are going to be serving those entities. And I don't think that's going to happen until we get around the threat, I guess I call it for lack of a better term, of that federal issue conflicting with state legalization. There's this disincentive for financial institutions to be serving the cannabis sector. So that safe harbor would go a long way in the 33 states where there's some level of legalization in providing financial services or enabling financial services to be provided to those businesses that are going to be popping up big time, I think, in the near future.
So
Anything I missed there, Rob?
You hit on an important point. Just to be clear, the Safe Banking Act does not solve all the problems. The nature of the regulatory system and the requirements on the regulatory system on financial institutions like banks and credit unions are such that it's still fairly expensive to service those accounts. It becomes even more problematic in small states like Vermont, where you don't have sort of the volume to get to a scale that allows you to get to a break-even point fairly quickly. So you have to sort of rely upon either a bank or credit union's philosophical beliefs that everyone should have access to the financial system, and they're willing to at least try to do it as close to break even as possible. But even at break even, it's such a minor part of their business that it becomes, it can become problematic. So I want to be clear, Megan, I don't think that when the Safe Banking Act, if it ever gets passed, that all of a sudden you're going to see, dozens of financial institutions jump into the market, but it'll at least address the risk issue, which will be helpful for some boards.
Yeah, absolutely. I appreciate that.
Good point. And we'll be happy to provide you whatever further background information we can on that. Megan, whether it's, data on credit unions that have been doing this nationwide already or anything specific to Vermont. I don't mean to pick on people, but John, I'm looking at you. So
I was off mute a few seconds ago, but let me, hi Megan, this is John Dwyer. We've met before with New England Federal Credit Union. I'm going to shift gears to a different topic, but a similar frame. And that is, when we think about the powers that are we're authorized in terms of services. One that could be coming at us in the relatively near future revolves around things like stable coins and currency that is central bank digital currency. So the Federal Reserve is evaluating whether they will offer a central bank digital currency and whether they will support stable coins. The theme you'll hear from us as those topics come to the congressional office or into Congress is quite simply parity. We're looking for parity of ability to serve those products and services to our members, parity with banks, parity with other federally insured financial institutions. So we don't have an ask of you yet in that context, but I do think that it's likely in the coming year, maybe even less. Federal Reserve has got some paper out right now looking for feedback. NCUA does allow limited authority through a third party for credit unions, but clearly as those currencies get developed and they certainly if they start being accepted by consumers on a more regular basis, it is very important that credit unions be included in that capacity. So we'll keep you informed, but that is one of the areas that we would want to make sure we stay involved in.
That's great. I really do appreciate that. I hadn't made that connection yet, so I appreciate you flagging that.
Yeah, we don't need to bog the whole discussion down with all of the different paths this could go, but suffice it to say that the Fed is moving, so we'll keep an eye on it.
Something related to that, John, that I caught in a headline today, but I didn't get a chance to read the article because I was going into an appointment, but I thought I saw something referencing that President Biden had signed something related to crypto and cryptocurrencies and digital assets that, well, I don't know if it was like a directive to agencies or what about research or treatment or something. And I'm not sure what it was because I didn't get a chance to read the article. Did you hear anything, Megan?
Well, what I heard at GAC last week was that there was a committee or some group from the White House was evaluating the support for digital currencies through banking and through, again, federally insured financial institutions. And one of the risks of that came out of that report was the potential that either Federal Reserve or other agencies would limit the types of institutions that were qualified to provide those digital currencies. Now, recognize there's complexity around whether issuing or supporting or transacting or being a conduit. Those are all different ways that we may get involved in cryptocurrencies. But I think that was, I don't know if we're talking about apples and apples here, Joe, but that was what I did hear about last week.
That may be what I caught in a headline today.
Yeah, and I just did a quick search because I assumed it's probably going to be an executive order that will be issued this week on how government agencies can start moving towards all of the things that we need to think about when it comes to stable coins and crypto. So I think that's part of the discussion.
Yeah, it's a great example of the kinds of quick or the velocity around change related to the Fed's involvement in, federal government's involvement in accepting, because you're talking about payment channels. You're talking about the rails on how members or consumers, make payments with each other, with businesses. And that's a set of rails that the financial institutions, obviously banks and credit unions, not only are involved in, but rely on as part of a connection with our members. And obviously thousands of Vermonters have decided to do that with us, with credit unions. So that's why we certainly need to stay involved in that.
Absolutely. Thank you.
Interestingly, the whole Ukrainian situation kind of shines a little bit of a spotlight on that issue too, as Russian people look for other means of paying for things and moving money between nations and so on and so forth. So it's an interesting discussion area. Hey, others of you want to share? What are you doing is there anything that comes to mind that you're doing in your credit union that you're seeing with your members, with businesses that you can share with Megan and with the rest of us that are great examples of the above and beyond kinds of things that you all do, because I know you do a ton of it.
Megan, it's Matt Lewandowski from Heritage Family Credit Union. How you doing?
I'm good, Matt.
Just wanted to talk a little bit about something Bob brought up earlier, and that's been on the docket for a while, and that's business lending cap. With COVID taking place and us doing all these PPP loans, we've really gotten more and more business members than we had before, and we're starting to bump up against that business cap, and I'm sure a lot of the other credit unions are too. And that artificial cap is really making us manage our lending practices at this point in time, because we only have about 24% left. And so we're looking at participations. We're looking to see what we can do to manage that to that number. And with all these new members, all these new business members coming on board, we really don't want to limit ourselves to what we can offer them. So it's coming, for us at least, it's coming to fruition. And we knew it was going to come at some point in time, but it just got a little quicker because of COVID.
Mm-hmm. And can you talk to me about like what and maybe this is all part of the other data that Joe's working on, or just anecdotally, a snapshot of 2019 versus 2022 business lending, like how much has that, I imagine kind of like a hockey stick just because of the demand.
Right, exactly. And, our PPPs, we did about 24 million in PPPs, 600 of them. And that's all paid off now, right? I mean, quick money. But with that came a lot of other lending. And we've probably gone from a little under 50 to just under 25 now. So it really has ramped up for us. And there's still a big need out there. And as people are starting to come out of this situation. So we want to have that ability to serve those members.
I appreciate that. And maybe, Joe, I can just ask the question that's kind of been in the back of my mind and this could be to you, Matt, this could be to the group. I'm really curious about how your relationships have changed because of the pandemic, and what are kind of some of the best practices that you think about that you'll continue moving forward?
Well, for us, I mean, it's really been taking care of their needs. I mean, we've always taken care of our business members. We used to kind of focus on the lending piece of it. Now we're focused on the entire relationship. So we've really got into the deposit side of the business relationship much more during the last 2 years, and that's rounded out that business relationship for us. So yeah,
that's great. Thank you.
Really have to change for us.
Yeah.
Hi, this is Jean Geyer from Vermont Federal Credit Union. And what we found as a result of COVID-19 was that we got a lot of smaller businesses in that we hadn't been associated with before because they were unable to get service from their banking relationships. So this did put pressure on us also, and we're about $20 million away from the cap. And so that's about 1 year for us.
Great, thank you.
And Megan, this is Rob from BOCC. That brings up an alternative approach, right? I mean, there are two different ways to get at this: either change the cap or increase the amount that qualifies or isn't counted against the cap. Right now, that's relationships of $50,000 or less. What you're hearing from all of us is that we play in the small business space in Vermont, and that's where you want us to play. So just exempt more of that from the cap calculation. I think that's a different way, maybe a more politically feasible way to get it through.
Yeah. So do you think a right size number then would be to double that? That's the hard question, right? Like, what would be an average loan for a business of 5 to 10 employees?
So that's difficult. Depends on the business. Sorry. So it's going to be difficult to give you an answer to that. I would tell you that on average, our average lending relationship is around 250, 300,000. And it may be a little less than that, frankly. Okay. So honestly, I would be a little bit more adventurous and go a little higher than doubling. But I know these things all get worked out in the process, but I think that that's legit. I mean, a $250,000 lending relationship is not large, and frankly, is not where most of the banks are focusing their attention, which is exactly why you want to encourage that activity by us.
Great.
And
Thank you.
back to where I started, Megan, I think, you know, we would be enthusiastic of any legislation that gave us some measure of relief in this area, right? But the key is, you know, we would encourage the congressman to take policy positions that gave us the maximum kind of flexibility and the maximum parity so that we can do the most good possible for your constituents.
For what it's worth, at one time, there was no business lending cap on credit unions at all. And it was a legislative trade-off in the law many years ago when whatever the issue was, and I think it was a field of membership issue, was challenged, and not many credit unions were doing business lending at the time because it was so long ago. Credit union awareness among businesses was very low at the time and whatnot. And so there was a trade-off of sorts for, you know, field of membership protections for credit unions versus putting a cap on business lending that wasn't really prominent at the time. But so many businesses have come to credit unions since then, again, in recent years, that, you know, all of what you're hearing is common among, I think, a range of credit unions. And I don't have any data in front of me to substantiate this, but I know that I've seen many times that whether we're talking about a $250,000 loan like Rob was referencing, or a $25,000 loan, the average size of loans to businesses by credit unions nationwide on average is a lot smaller than it is in the banking sector. So whether you're talking PPP loans or other types of SBA lending or just regular business loans that Matt was referencing and Rob was referencing, you know, the average of all of those, whatever level they may be at, is appreciably lower than other lenders. And so I think that says something about what you've heard with the types of businesses that credit unions are catering to, and that others possibly are not, or not as favorably.
So to that point, you know, most of the bulk of our business loans are, you know, secured by commercial real estate. So our loans tend to be a little bit higher. So when we're doing a $1 or $2 million, you know, commercial mortgage, it pushes that cap up real, you know, pushes us closer to the cap real much quicker. And we're seeing a lot more of that than we used to be in the past. And that's where we're having to manage that cap number and then participate out to fellow credit unions.
Do you all think, and I'm kind of like, you know, just thinking outside the box here, but besides the heightened awareness of credit unions, combined with the fact that more of you are doing business lending than used to be a decade or more ago, is there another factor that's pushing small businesses or any size businesses towards credit unions? The fact that the consolidation among, let's say, the traditional banks in the state of Vermont, and many of them being acquired by institutions that are out of state, results in more people wanting to keep their business local and turning to a local credit union as opposed to some institution based 4 states away or something like that.
I think that part of the difference is that we're happy to lend to a landscaping business or to a hair salon or to any of those businesses on Main Street that keep the economy going. And I think that that's really the difference. Is the banks get larger, it's the decisions are not made here, and it's harder and harder for people to find this kind of lending.
Yeah, absolutely.
Other comments from any of you, or anything you want to share with Megan or with the rest of us, or ask? I'm not hearing a ton of noise, so I'm going to guess not. Thank you, Megan, very much for the spending time with us. And sorry that Peter couldn't be with us, but we do appreciate his support of credit unions over the years and the work that he's doing on the Intelligence Committee right now, too. And most of these issues, bill numbers aside, most of these issues are things that we've had discussions with Peter on before, so they're not new to your office. But we'll be happy to share whatever details that we can on all of these things and more with you or anybody else in your office too.
It's great. Thank you so much. And I should have said the most important thing is I'm a proud credit union member myself. So I should have started with that. I totally forgot. But I appreciate the good work you do for the communities in Vermont and for our shared constituents. And please do not hesitate. If you need anything, you know where to find us. I appreciate all your good work. Thank you all.
Awesome. That proud credit union member comment is the most important thing we're going to note this afternoon in our discussion with you. So thank you very much.
Thank you.
Thank you.
Bye, everybody.
Thank you, everybody.